Welcome back to today is going to be really exciting session, and I believe that thing uh, should be right, but I'm afraid that I don't want it to be right. So let's look at it from the point of view of what markets are telling us rather than what we want to see it from the market. But before that, risk. Trading is risky. You need to take care of your own risks. Please do not consider this as any kind of tip. I'm doing it only to help you understand, learn how Elliot waves and other market trading things work in the market, and just getting to show you what really how really you would be able to do your analysis. Okay, so and your success depends on lot of factors. I do not take any responsibility for your financial success. So with that out of our way, let us quickly go to the chart. A lot of lines. I am going to be talking about something which is really different than a lot of people would talk about it. So let me just start talking about three targets that I have been tracking. The topmost target, let me just zoom in a little bit to be able to show you the topmost target. The topmost target looks to be somewhere around 18,160 levels, which is close by. Uh, Second target, I would expect it to be near about 17,000 levels. Okay. And the third target seems to be somewhere around here, around 13,500 levels. Okay, 13,400 levels. We will work out the last target little later. You don't want to trade it with the last target. You have to take trading step by step, right? But these are the targets. Now, I have been telling a lot of times over a lot of recordings that there seems to be one more up leg possible. But beyond that, there is going to be a major downside. But remember, this downside, I would not recommend you to put a lot of trade in short side. I have already made up my point multiple times that this is going to be a correction in the sudden move, and that sudden move is having capability to take you to 23,000, maybe 25,000, maybe 35,000, maybe 40,000 Nifty. We will talk about those levels later when the correction gets over. But be little nimble with your short trades, because at a very high level, we are in a uptrend, and we are in a very fierce wave 3. Now, if that wave 3 is over, it doesn't look like, then we would have a correction which is going to be a painful correction. But again, I don't think it is. It looks like. So again, take let me take you to the monthly time frame, and start talking about what is that I expect. Okay, so from till about 2009, we have had 1 and 2, and now we are in the long term wave 3. Okay, long term wave 3, which can take us to any levels. I don't want to talk about those levels yet. Even my numbers could go wrong there. uh, this typically happens, so I don't want to talk about those numbers. It could be 50,000, it could be 100,000, it could be anything. Now, within that third wave, we have finished wave 1, and we have finished wave 2. Wave 2 we finished in February of 2020 after the COVID crash. And after that, we have started wave 3. Now, that wave 3 probably is going to be done with 5 wave series: 1, 2, 3, 4, 5. And although in that first set, I am able to see 1, 2, 3, 4, 5, and I'm going to zoom in and show you. So I'm able to see those 1, 2, 3, 4, 5 getting over. but it does not seem to be finished of wave 3, for the simple reason that it is not really large enough to call it as a wave 3. So if you look at this wave 1 and 1.6 of that wave 3, we are talking about a range of around 24,000 or higher. Okay, that is a typical wave 3 that we are expecting. So now, if that is the case, then we probably would have only finished one of three, and after this one of three, you are going to be seeing a two, which is going to be a sharp, most likely a sharp correction. And after that sharp correction, you are going to be having third, and third of third. If that is what is going to happen, it is going to be a vertical climb. Okay, third of third is a vertical climb. It does not give lot of opportunity to lot of people to enter. Okay, so that is why I am saying, even though we see a possible correction in the market, be very nimble, be very careful. When this turns around, it will turn around like this, and you would see markets taking a sudden u-turn if my counts are correct. Okay, and I'm not a god, I'm not a fortune teller, I am only an analyst. I'm analyzing the markets using a tool, and I have got all the rights and to be wrong. We all, trading is about probabilities, right? And with those probabilities, we need to take home money. As long as you are taking home money, you are a ace trader. I mean, some people would take 3% a month, some people will claim to take 30% a month, some people will be happy with 1% a month. Really doesn't matter. Now, let's talk about it. Why do I see the full wave seems to be over here? Okay, and if you don't understand the Elliott waves, I have done a recording talking about what is Elliott waves and how do you analyze that using Elliott waves, analyze markets using Elliott waves. So you may want to look at that. So now let's look at the whole of wave starting the crash of 2020. Okay, beginning of 2020 we crashed, and from there we started a new impulse, and that impulse had a 1, it had a 2, and then it had a 3. So this was most probably a 3, which ended up with a 4, which was a lot more sideways, and it's very less deep correction. I mean, shallow correction, I would rather say. And from that correction, we have had a wave 5. Okay, that is how we have seen the markets going in. Now within that, you had got a 5-wave series and all these things. I'm not getting into the details, otherwise this video will get very long. But now I'm saying, I'm making a statement that it looks like this 5th wave seems to have been over. Okay, and we would have probably done very similar to something called as double top. Okay, so let me just quickly zoom in and talk about how really we span over this period. Okay, and I would look at this pink line is the all-time high that we made after this crash. Okay, so all-time high that we made sometime last year. I think it was September or October 2021. Okay, October 2021 we made a high, and after that we have seen a deep, not a deep, a shallow correction, but very directional market on southwest. And then I did talk about 15,200, and from that level we started going up. Now within that wave, we have okay, before I would talk about that, see, whenever there is a resistance, a lot of times you would see markets behaving very erratic. So markets are hesitant to break the levels, and once they break the levels, they would again try to retest those levels. Okay, so here around November, end of November, we broke those levels, and we saw that, And then a lot of people said that now markets are in uncharted territory. Even I mentioned that, and I said there will probably be a one more wave up. But then very early in time, not even 200, 300, 400 points, market started coming down, and it came down with conviction. Okay, when markets were coming down, it looked like a smallish correction, and then I believe that it would take support on this all-time high, last all-time high line, and then it will march upward before it starts coming down. But at the same time, based on Elliott wave counts, we're always of the opinion that markets will probably top out very very soon. So I had told people not to take new longs. Now, after that, it broke these levels, and then all of a sudden it bounced again. Okay, and on some of my people know on my chats, I did mention that this day, yesterday, yesterday was 14th of December, was a very big move. Okay, because markets were looking at this resistance level, they were not able to get over, and then we gapped over a resistance. It is very very aggressive, and I also made a few trading mistakes there with making understanding of that. But yesterday itself, with this red candle, market said that wait, there is something which doesn't seem to be right. If the markets actually were powerful and they actually had to crack that resistance and then had to move up, they would have given you a green candle, which did not happen. Okay, so markets, yes, market had powerful participants, but then those powerful participants were met with a lot of resistance. And if you really look at it, after this move, this was all exactly 61%. Okay, so it retraced near about 61%, 61.8%, and from there it started coming down. And after that, today markets tried to take support from this level. They went up, and then sellers came in, and sellers have pushed them very very hard. Now we still need to be sure to see a follow through, but it looks like now we will not be able to make a new high. So whatever I am saying, all the levels that I'm talking about, they should have a stop loss of near about 18,900, 18,950 levels. If markets cross these levels, you are going to say that my analysis was wrong, and I need to go back to the drawing board again, and I need to do the analysis again. Okay, so this is a very very peculiar thing that you would be able to watch. And if you are someone new to the markets, please keep a track of these kind of things. Now you have got a new all-time high, markets may react to that, but the more time the all-time high remains, the better resistance it becomes. Okay, so that's something that I wanted to talk about. Now let me quickly talk about the blue fifth wave. Okay, so from here, uh, 15,200 we were counting, and we have counted it multiple times. And this red, the blue is, I think it should be primary wave. That is primary wave. And from the primary wave, after that you have an intermediate wave, which is 1 2 3 4 red, and then 5. Okay, within that we had 1 2 3 4 5, 1 2 3 4 5, all that perfect. Then this correction, we made some mistakes here also in counting, but that's okay. And after that we had this 1 2 3 4 and 5, and within this three you are able to see 1 2 3 4 5 also. And now let's look at little detail level. So let me go to a 2 hourly chart, and here. Yeah. So from here we had a 1 2 3 4 5, very nice. Then we had we this is probably not accurate. 1 2 3 4 5, sometimes Nifty actually does 5 wave corrections, by the way. Just keep it in mind. Then we had a 1 2 3 4 5. pretty nice. This third is an extended wave, and it had to extend itself because it wanted to crack the all-time resistance. You see, it broke and then retested again and then went up, and that is where you had this 1 2 3 4 5 getting over, where uh, this wave. Okay, let me just talk about which wave is this. This is a minute wave which got over. After that we have this black wave. uh, I think it should be minor. So we have got minute wave over, minor wave over, intermediate wave over, and a primary wave over. So this now becomes a very high resistance. There are four waves which have ended up there. Okay. And now we only have are left with cycle, super cycle, and grand super cycle. And that is why I would expect now the markets to come down. When markets come down, they will come down in a very simple, straightforward way. If I have to talk about it, it will be an ABC. But within that ABC, there will be lot of stories. Okay, A will not be a straight line; it will be 1 2 3 4 5. Now that within 1 2 3 4 5, one maybe 1 2 3 4 5, and then two maybe correction, so on and so forth. Okay, so based on that, unless we are able to find out what really the wave counts are coming along, it would become very difficult to give targets. Okay, so if I have to say that this is the lowest level ABC correction, so this was an A, we corrected with B 60%, and if C was same as wave A, then my first target comes to 18,150 levels. Very, very simple, clear to understand. Now let's say that we were in a correction. Unless we have got little more data, I would not be able to plot those and expect those. But since we have crossed all those 4 5 levels, then we have got those targets, right? And those targets typically are at wave 4. Okay, so earlier wave 4 will become a new target. So for the blue line, this not the blue line, for the red line, this could become a target. Okay, and then for the blue line, this could become a target, and so on and so forth. Or alternatively, you look at around 35% to 50%. 50% is a fair target. If this is a wave 1, then it would correct by at least a 50%. So if I go back onto the daily chart, if I go back onto the daily chart, and if I say that this is the last wave which is in correction, okay, 15,100 until the recent high, then the 50% level comes to around 17,000, 17,100, 17,000. Okay, so that would be 17,050. I have not done perfect calculation, so please put 30 40 points here and there. So that is 17,050. Now, if we say it is not really this blue line, which seems to be correcting, I don't know why this blue line has gone here and there. Happen. Uh, there it came. So now, if it is not on this blue line, but this is a one bit after the black, there is one more red line which I have not drawn, which could be a 1 and a 2 and a 3. Okay, so if that is the correction on that 1 and a 2, then we are talking about 50% correction to come around 13,500, 400 levels. Okay, that is why I am saying these are my three targets to watch out for. Hmm? But again, I'm telling you that this is after the very nice 1 and 2, and this is a third wave. If we are into a third wave, you expect a sudden turn around, and then markets can start going opposite way. What I would recommend you investors, you start collecting or saving or whatever, taking out money, be ready to put a lot of money into markets, because markets may give a very huge up move, but before that up move there is a down move which is expected. I hope I was helpful. Another very important thing now, with this fall, India VIX has moved to 13.7. Let me just quickly show you the chart of India VIX. So India VIX has moved a little higher, giving decent enough opportunities, but not yet at my comfort levels. But I'm on watch out for option trades. If I could get a decent, at least 3% or 2% in a week, kind of a trade, then I would talk about it probably next week. But till then, I cannot guarantee you anything. Okay, so with that, let's take a quick break till next week. Make sure that you preserve your capital. Make sure that you do not take undue risks. Have If you are going for short, very strict stop loss of the recent all-time high, or little above that, actually 18,900 2030 levels. You should keep that stop loss, and these are the different targets that you could evaluate for your trades. Be nimble, that is the most important thing. Hmm? Good opportunities will be there. Good opportunities will be there, and they will always be there. Nothing wrong in it. Yeah, so okay, thank you so much. Catch you later. Sorry for making this little longish.